This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Risk assessment is a rare confluence of events potentially signaling the all clear for investors.
The Oracle speaks. The big mistake Warren Buffett says some investors like you may be making.
Hot topic. An old drug gets a new price tag to treat a rare and debilitating condition. Those stories and more tonight on Nightly Business Report for Monday, May 8th.
Good evening, everyone, and welcome. Well, the gains were small today, minuscule, really, but they were good enough to lift the S&P 500 and NASDAQ composite to all-time closing highs. Investors seemingly concluded that the market had dodged yet another risk, namely that France might elect a far-right opponent of the European Union and the euro currency. Well, the French, for now, voted for a moderate and the status quo, and that was enough to let investors globally focus not on European vote counts, but on the improving health of Europe's economies and stock markets, which have been climbing. We begin tonight with two reports. Bob Bazzani takes a look at the risks to the market and whether they are lessening, but first, Michelle Caruso-Cabrera in Paris.
Last night marked yet another major upset in global politics. Emmanuel Macron started a new party only 1 year ago, wiped out both the socialists and the Republicans who had dominated French politics since World War II, and then won decisively against another outsider, Marine Le Pen, to become the next president of France.
Vive la France!
The rest of the European Union breathed a sigh of relief. That's because Macron is very pro-Europe and pro-Euro, while Marine Le Pen wanted France to return to the franc and reestablish France's borders. French business owners are anxious for Macron to fulfill his campaign promise of reducing labor market regulation.
Magnifique.
Boulangerie owner Samy Boutois just won the annual Best Baguette in Paris contest.
How many baguettes did you sell yesterday?
2,000.
He voted for Macron.
Can I taste it?
It's very, very hot.
He tells me France's 35-hour work week is nonsense. He works that much in 2 days. And even though business is up sharply since winning the annual contest, he's afraid to hire more people because if there's ever a downturn, it's legally difficult to do layoffs. He wants Macron to change that. Economists say nervousness about hiring is one reason France's unemployment is stuck near 10%. On the outskirts of Paris and Saint-Denis, unemployment is 20%. And while unemployment is above average, voter turnout here on election day below average.
At midday, we have 14% of turnout. It's 2 points down between the 2 weeks ago.
The mayor says many of his constituents didn't like Le Pen's anti-immigration positions, but they also didn't like Macron's planned economic reforms because they are too free market. That viewpoint not unique to this neighborhood. The French Ministry of Interior says voter turnout across the country was the lowest in 40 years. Leaders across Europe are cheering the outcome of the French election because the anti-EU candidate was squashed. However, if you go back to the first round of the elections 2 weeks ago when there were 11 candidates, nearly 50% of French voters chose an anti-EU candidate, suggesting that the European Union has a lot of work to do to get wider acceptance here in France, despite the outcome of yesterday's election. For Nightly Business Report, Michelle Caruso-Cabrera, Paris.
As we mentioned at the top of our program tonight, slight gains were all it took for the NASDAQ and the S&P 500 to close at new highs. The Dow Jones Industrial Average rose 5 points to 21,012. The NASDAQ tacked on just 2, and the S&P 500 was just a tick higher. The markets were uncommonly calm today. In fact, the so-called fear gauge known as the VIX slid today to its lowest level in nearly a quarter century. So we asked Bob Bazzani to take a look at whether risks to the market have really lessened. Here's his report.
Is the stock market priced for perfection? Well, it sure is, but the data points are just about as close to perfect as you could ask for. First, with the French election over, geopolitical risk is much lower. Second, earnings are above expectations for both Europe and the U.S., and full-year guidance has been strong. Third, the U.S. economy appears to be improving. With April's strong jobs report, it's looking likely that the first quarter's weak numbers are just an anomaly. And the Fed is looking pretty prescient. They call that first quarter data transitory. Fourth, the Federal Reserve is essentially out of the picture right now. Traders are expecting 2 rate hikes, and nothing's happened recently that's really changed that view. The economic data is good, but it's not too good. And finally, tax cuts are now in play. This is a pretty rare confluence of events. Lower risk right across the board. It's not surprising that world markets are at new highs, with Germany and the U.S. at historic highs, France and Japan's better than 12-month highs. So is the U.S. market expensive? Yes, it is by historic standards, but not dramatically so. So why aren't traders more excited about all these new highs? Partly it's because the highs have come on low volume and low volatility. But that's not surprising either. Prices are too high to make buyers enthusiastic, but sellers are not enthusiastic either because everyone believes that a modest drop in the market will only be met with more buying. Why sell? So the bottom line, for the moment, the market is essentially saying, don't worry, be happy. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
Peter Donasano joins us now to talk more about the U.S. and global markets. He's an investment strategy analyst at Wells Fargo. Mr. Donasano, welcome. Good to have you with us. You heard Bob Pisani conclude his report by saying that the VIX seemed to be saying that to investors, don't worry, be happy. Should we be worried about that?
Well, so we've noticed that the VIX has gone down, trended lower as markets have moved higher. We believe that the U.S. markets and global markets generally are reflecting more positive economic environment and an improvement in the earnings environment for not only U.S. but international companies as well.
So Peter, if I'm a long-term investor, do I still put cash to work here, given the run that this market has had, or are there other areas around the globe that you think maybe provide more return?
Yeah, so after the run that we've had in the U.S. markets this year, we think this is a good opportunity to take some cash off the table out of the U.S. and put some of that money to work internationally.
Where, for example, would you be putting money into developed Europe now that apparently some of the sort of existential risks to the European Union have lessened, or would you be looking elsewhere?
Yeah, so we like to invest internationally across both developed and emerging market economies. We like to do so on a regional basis. So within developed markets, we like to allocate money. We have a favorable view to the Pacific region, which includes Japan, Australia, Hong Kong, Singapore. We believe that improving economic and earning fundamentals there have warranted higher valuations. In terms of Europe, we've also seen improving economic and earnings valuations or fundamentals there as well. But we believe that the markets have come too far, too fast over the past couple of weeks, and we encourage investors to wait at least in a few weeks as investors work to consolidate. We saw some of that consolidation in markets today after a strong run-up last week.
Finish your thought. Yeah.
Sure, and I was just going to say in emerging markets, we favor emerging Asia, which includes China and India, and we don't like markets in Latin America or emerging Europe.
All right, thanks very much, Peter. We appreciate it. Peter Donasano with Wells Fargo.
Thank you.
Warren Buffett says he never wants to be out of the stock market, and one stock the chairman and CEO of Berkshire Hathaway has faith in is Apple. Well, shares of Apple climbed today, reaching a market cap of $800 billion in trading, making the world's most valuable publicly traded company worth even more. Becky Quick interviewed Mr. Buffett this morning following his company's annual meeting this weekend in Omaha.
There's a lot that Warren Buffett says he doesn't know when it comes to stocks. He says he doesn't know where the market will close today. He doesn't know where it'll close a year from now, and he doesn't know where interest rates are headed either. But there is one thing that he is certain about, and that is that stocks are a better investment than bonds.
I would say this: anybody that prefers bonds today to stocks is making a big mistake. I've been saying that year after year after year. Now, I won't say that under all circumstances, but it is ridiculous, in my view, for somebody to buy a 30-year bond, and some countries 50-year bonds and so on, at these rates, in preference to buying stocks. Stocks will bounce around a lot more, and they can go down 50%. But a 30-year bond can go down 50% too at these rates. And bonds are a terrible choice against stocks.
He also spent a lot of time at the shareholders meeting talking about a subject that he rarely touches on in there or has touched on in the past, and that is technology. He says that Amazon is a great company, but he wouldn't buy the stock right now. He said he missed that one. However, Apple is a different story.
the shares, when we bought them at least, were much more reasonable in relation to current earnings. Apple didn't have to do a lot better in the future than they were doing at the current time. When you get into a Google and Amazon, you're paying for the future more, but they may well have a better future. I mean, that may be more than justified. And Apple, I wouldn't say it's easier for me to understand than Google now, perhaps, or Amazon now. Certainly would have been 5 years ago. It's amazing where Apple's ended up with consumers. I mean, I can very easily determine the competitive position of Apple now and who's trying to chase them and how easy it is to chase them.
For Nightly Business Report, I'm Becky Quick in Omaha.
Still ahead, unusual alliance as competition in the wireless sector heats up. Two companies are doing something completely different. It's official, Sinclair will pay about $4 billion for Tribune Media and its 42 local stations, beating out 21st Century Fox. The combined companies will create the largest single group of television stations in the nation. The chairman of the FCC last month reinstated a rule that helps station owners get around current audience caps, and he has recently said that he wants to loosen TV ownership rules. Shares of Tribune rose, Sinclair's fell.
The bidding war for Straight Path Communications is intensifying. The wireless spectrum holder received a buyout bid nearly double its offer from AT&T. The company behind the new bid has not been disclosed. The Wall Street Journal reported last month that Verizon was seeking to buy Straight Path's high-frequency airwave licenses. AT&T has 3 days to respond. Straight Path shares today soared nearly 33%. Over the past month, the stock is up 480%.
Take that out over a year. Wow. Meantime, Comcast and Charter Communications are joining forces to better compete in the wireless industry. Julia Borston takes a look at this unusual and complex venture.
Comcast and Charter are partnering for 1 year to improve their position in the competitive wireless market. This is ahead of Comcast launching a wireless service this year and Charter entering the market next year, both using Verizon's network within their cable footprint. The two companies say they won't buy other wireless companies or make related deals without consulting with each other first. The partnership aims to help them save on costs and better compete with AT&T, T-Mobile, and Sprint. They'll partner on back-end issues such as billing and will encourage customers to use their Wi-Fi hotspots whenever possible.
From a consumer perspective, I think we've all seen that cord cutting is obviously happening more rapidly than we thought. But these companies want to have a relationship with consumers. And this is one way to do that. So the more services they can offer in the bundle and the better they can make that bundle, obviously their customer retention is better from a consumer standpoint.
Analysts say this puts a hold on any big telco acquisitions by either cable giant. Comcast shares were flat today on the news, while Charter shares traded down after rising in recent months on speculation about potential telecom deals. Analysts say this could boost chances of a Sprint and T-Mobile merger or even Comcast and Charter eventually merging. The regulatory hurdles could be impossibly high.
It's the first step of probably a longer-term partnership. Obviously, the two don't compete with each other, so it's kind of in the spirit of co-opetition, if you will. But I wouldn't rule out an acquisition of T-Mobile or Sprint down the road. And I think if they're serious about competing in the wireless market, they ultimately have to have owner economics in wireless.
The question then is what comes when the deal expires in a year, as mobile video and revenue from wireless subscriptions play a bigger role in these cable giants' balance sheets. For Nightly Business Report, I'm Julia Borston in Los Angeles.
And we should point out Comcast is the parent company of CNBC, which produces this program.
Coach is buying Kate Spade, and that's where we begin tonight's Market Focus. The handbag and accessories maker said it was acquiring its smaller rival for nearly $2.5 billion. The new deal highlights Coach's ongoing efforts to attract a younger demographic, with the company saying that Kate Spade has a strong awareness among millennials. Coach shares rose 4% to $44.71, while shares of Kate Spade popped 8% to $18.38. Newell Brands raised its guidance for the year following better-than-expected earnings. The maker of household products like Sharpie markers and Elmer's glue said results were helped by a gain related to the sale of the company's tool business. Newell also lifted its quarterly dividend 21% to 23 cents a share, and the shares jumped almost 12% to $51.93. Tyson Foods said fires at two of its facilities hurt its production, causing the meat producer to report earnings that missed expectations. Revenue inched lower, but was still stronger than expected. Tyson also said Florida's Attorney General requested information from the company regarding possible anti-competitive behavior. As a result of all of that, the shares fell 6% to $59.48.
The activist investor Elliott Management disclosed a more than 15% stake in the software maker Gigamon. In a regulatory filing, Elliott Management called Gigamon shares undervalued, said it wants to speak to the company's board about maximizing shareholder value. Shares of Gigamon took off on the news, rising 17% to $41.20. Profit rose more than expected at Marriott as the world's largest hotels chain benefited from more people booking more rooms at higher rates. The company also posted revenue that topped street estimates. Shares initially rose in after-hours trading, but they ended the session down a fraction at 96.37. Meantime, Hertz saw its loss widen in the latest quarter, sharply missing analysts' expectations. Revenue also lower than expected. Despite the disappointing results, the car rental company said it is seeing progress in its turnaround efforts. Shares initially fell after hours. They also ended the regular day down, but only marginally, at $14.91.
A drug to treat muscular dystrophy faced backlash when its price tag was set at nearly $90,000. Today, the medicine has a new owner and a new list price. Meg Terrell has the details.
Christine McSherry is used to a fight. Her son Jet was diagnosed at age 5 with Duchenne muscular dystrophy, a rare debilitating condition that put him in a wheelchair just before he turned 14. One thing she didn't plan on having to fight for was access to an older drug her son was already using. Jet has been taking a steroid called deflazacort since he was 8 years old. It wasn't approved in the U.S., so McSherry, along with a number of other families of kids with Duchenne, imported the drug from overseas. It cost about $1,200 a year out of pocket. Today, that drug got a new price tag, $35,000 a year for a patient in the U.S. weighing 25 kilograms, or about 55 pounds.
$35,000 per 25 kilograms is pretty aggressive, I would think.
PTC Therapeutics, which set the price, says it, quote, represents sustainable pricing, which balances providing access to eligible patients in the United States while maintaining sufficient infrastructure, including continued investment in Duchenne. But McSherry says the drug's cost may be even more than $35,000 if patients like her son weigh more than 25 kilograms.
My son is probably on the highest, one of the highest doses, almost 50 milligrams a day.
She estimates a cost of more than $100,000 a year. And she's concerned her old system of importing the drug is going away now that it's approved in the U.S. The drug's route to this price is a complicated one. Earlier this year, a private drug company called Marathon Pharmaceuticals acquired rights to deflazacort and took it through the FDA approval process. Then it set an annual price in the U.S. of $89,000, generating an immediate outcry from the patient community. That's when PTC Therapeutics stepped in, paying $140 million to Marathon to acquire deflazacort.
PTC at that point came in, acquired the asset, and has sort of, for lack of a better word, rethunk the commercial approach to the drug.
But its new price tag is still drawing criticism.
It's the drug business back in trouble again over pricing. They just don't seem to learn their lesson.
Insurers and pharmacy benefits managers may pose barriers. Already a number have said they will require patients to try a cheaper steroid first before they'll pay for deflazacort. Both PTC and many patients argue deflazacort has a better safety profile. So this is a headache Christine McSherry says the community doesn't need.
And the burden really is with the patients and the families. We are the ones who are going to have to write all these appeals and appeal to our payers to try to get this drug covered.
And in a changing environment for healthcare in the U.S., they worry about paying for something else. For Nightly Business Report, I'm Meg Terrell.
Shares of PTC Therapeutics had a rough day. They fell nearly 12%.
Well, the price of prescription drugs is one hot topic in Washington, and another is the U.S.'s relationship with China. And despite tough talk over trade, some U.S. officials are also actively seeking investment from the world's second largest economy. Kayla Tausche has our story.
A month after a meeting between the U.S. and Chinese presidents, a select group of Chinese investors crisscrossed the United States, looking for investing opportunities in the Trump administration. In Washington, the group discussed changing U.S. policy toward China. Helen Yi helps coordinate the trip with the American Chamber of Commerce.
This administration is very different from previous. They want to understand, and then they will say where is best place for them to investment, how they should work with the U.S. local regulators.
In Omaha, Nebraska, the delegation visited Warren Buffett's annual gathering, met with executives in the railroad and agricultural industries, and were praised by the state's governor, Pete Ricketts.
We actually received our first investment from a Chinese company back in 2008. And again, part of the reason we do trade missions is not only to open up markets in China, but to look for those investors that want to invest in Nebraska to be able to help create job opportunities here.
Since the financial crisis, China has invested $140 billion into the U.S., increasing more than fivefold to $50 billion last year, much of it in real estate. Investors worry the president's tough talk on China
No friendship is strengthened through economic abuse.
Could change that, with trade a point of contention. China reported a trade surplus with the U.S. that widened in April. Kevin Guan says his family business, which makes compressor parts and has an office in Kentucky, is looking for clarity on the administration's trade policy, which affects whether it will expand.
We will wait for a while if there's really a trade war. So we'll prepare for the materials price if there's any changes dramatically in the future.
Jeremy Shia runs a yoga sportswear and equipment company. His goal in joining the trip is finding partners to build his brand. The first step, a dialogue.
Political leaders, they're not the big picture, they're not has visions, but actually day-to-day operation, we need foundations, we need the base level communication, to work together to figure out the business challenges together.
Attendees say these conversations will be years in the making, but the White House hopes to repair its relationship with China in the shorter term, setting a late July deadline to resolve long-standing trade issues. For Nightly Business Report, I'm Kayla Tausche, Washington.
Coming up, a look at where the jobs are.
I'm Kate Rogers in Baltimore, and tonight on Nightly Business Report, we're going to tell you why nurses are set to have very solid job prospects in the years to come.
As we reported last week, the healthcare sector created more than 35,000 jobs last month. And if you look back over the past few years, that number balloons to more than 1 million jobs. And as Kate Rogers reports from Baltimore, demand is especially strong for nurses.
As a child, Jasmine Nerona wanted to become an accountant, but a love of science took her down a different path, nursing.
I saw nursing as a great way of doing science while also talking to people.
Today, she's advancing her degree as a nurse practitioner at the University of Maryland, hoping to be placed in a rural hospital like the one where she's currently training on the eastern shore of the state.
I really enjoy the patients there. A lot of patients haven't sought care in a couple years because they don't know how important it is for their diet and nutrition to go see a doctor.
Nursing students are set to have very solid job prospects in the years to come. The Bureau of Labor Statistics says demand for registered nursing will grow by some 16% through 2024, adding 500,000 new jobs. Salaries within the industry can range widely depending on degree and location, from $45,000 a year up to $150,000 annually.
The University of Maryland has nearly 1,900 students enrolled in nursing programs this year, up from 1,700 in 2010. The school is doing its best to get ahead of a projected nursing shortage in the state in the years to come.
We feel a personal responsibility for making sure that Maryland has enough registered nurses and professional nurses in order to meet the care needs of the residents of Maryland.
But the shortage is an issue beyond Maryland.
We're beginning to see growing shortages in different states and different geographic regions.
Medical facilities in inner cities and rural areas are particularly struggling to attract and retain talent.
Rural areas often have lower salaries. That's also true with smaller facilities. We see a real distribution issue that is only getting worse.
Navicin Health in Macon, Georgia is the second largest hospital in the state and is competing with nearby Atlanta for hires, which offers better salaries and a vibrant social life.
We're at a deficit of 150 nurses at this time.
The aging population is also a major contributing factor.
Individuals in our community are living longer and longer with chronic diseases, which requires us to need more nurses than we have had to historically. Many of our nurses are in the category of being baby boomers, and they're seeking retirement.
The new generation of nurses like Nerona are eager to step in, fully recognizing the job's challenges and rewards.
At the end of the day, when I go home, I might have had a hard day and not sat down or not eaten lunch, but I can look back on my day and said I made a difference in someone's life.
For Nightly Business Report, I'm Kate Rogers, Baltimore.
And that's why you do it, right?
That's right.
All right.
Calling.
On that note, that's Nightly Business Report for tonight. I'm Sue Herrera. Thanks for joining us.
And I'm Tyler Matheson. Thanks from me as well. Have a great evening. We'll see you back here tomorrow.